Mayor, council members, Mr. Driggers, we appreciate the opportunity not only to be here tonight, but to work with the city as you continue to move forward with your mission and vision. A couple things. One, we have finished all of our audit field work on site. Our staff, I've got Karen Overman that's here with me that was very involved in the city audit, as well as David and Susan from your staff are in the process now of putting together the final comprehensive annual financial report. So kind of the final report is in process right now. But we wanted to go ahead and come and talk to you and present to you basically two things. One is the results of the audit itself, because the numbers are finalized, the opinion's good and all that. Secondly, kind of give you the big picture in terms of the financial condition of the city as of last year end, June 30th. So by background, I like to kind of remind you of a couple different things. You're used to seeing those annual financial statements, and there's a lot of information in there. But I like to take a step back for just a second and talk about what's behind the scenes that's probably just as important, but we don't necessarily talk about it a whole lot. And that's the internal controls and the processes and the procedures that really are the annual financial statements are the result of what's happening day to day. Your staff work very hard day to day, thousands and thousands and thousands of transactions. And an important part of that process is making sure that there's good review, there's good monitoring going on to make sure that what's presented to you regularly as well as annually is accurate and complete. So one of the things that we encourage you as a council to consider, as well as administration and finance, as part of that process, is what we call risk assessment. And it's basically just sitting down sometimes and saying, where do we have concerns? You know, there is no perfect internal control system. It doesn't exist. So there's always risk. So where do we have concerns? Should we do anything different about it, or are we okay with the way they are? But just making sure that periodically that risk assessment is happening, we think is very important. Obviously, the result of the audit, as well as all of the work day to day that your staff does, is that comprehensive annual financial report. What you ask us to do is to come in, perform our audit services, with the end result being that opinion that we issue. And there's a number of things that go into that. Probably the most important thing from our perspective is just to remind you that that opinion is providing you all reasonable assurance, not absolute assurance that everything's fairly stated, because obviously we're not looking at every single transaction. David and Susan would not want us here as long as it would take for us to look at every single transaction. So we're selecting a lot of samples and doing a lot of work, the end result being that opinion. I am glad to tell you that for the year ended June 30th, 19, the city has received what's called an unmodified opinion. I know that means nothing to anybody, so the best way to explain it is that's as good as it gets. You cannot receive a better opinion than this unmodified opinion, and it does not matter whether you are BMW or the City of Greer. Everybody's goal is to receive that unmodified opinion. So you ought to be pleased with that. It's probably a good time for me to stop and say we really appreciate David and Susan and their staff. They have a full-time, more than a full-time job as it is, and then they have auditors that come in for several weeks a year and bother them and get in the way and, you know, do all kinds of other things to interrupt what they're already doing day to day. And so we really appreciate what it takes on their part to help us get this audit done. So with that, what I would like to do is just to hit a few highlights pretty quickly in terms of where your financial condition as of this last year end. And if there's one thing, if you talk to anybody who tends to look at these kind of financial statements on any kind of regular basis and they're wanting to know how the city's doing, if there's one thing, one measurement they're going to look at it is going to be the city's general fund balance. That's the one thing that they want to know. So that's where we start. The city's total fund balance for the year, actually for general fund, actually increased about $3 million and is sitting at about $19.6 million. There's a few pieces of that that are not available for future operations because they've already been committed in terms of your fire truck and some other capital projects, et cetera. So what's actually available, what we call unassigned fund balance, is really what's available for future operations. And you can see that balance is sitting at $18 million, or 83% of what your 2019 actual expenditures were. So from our perspective, and even compared to what your fund balance policy is as a city, you're in a very good financial place, financial condition with your general fund balance at June 30th, 19. So a lot of times the question we get asked is, great, we've got a healthy fund balance. Is it too high? Is it not enough? I mean, where is it really at? And there is no great answer to that question because it's a different answer for every city, for every municipality. But there's a couple things that I like to remind you of that are really important when it comes to considering your fund balance. Number one is when we measure this fund balance at June 30th, you as a city are going to be going about 5 to 6 months without receiving any significant property tax revenue. So one of the reasons you need a healthy fund balance is simply for cash flow purposes. This time of year is probably when your fund balance gets about as low as it's going to get before the property tax starts coming in for the next year. So number one, it's important to have a healthy fund balance for cash flow purposes. Number two, some of you have probably heard the same thing. We're starting to hear some rumblings again about the economy maybe starting to slow down. A lot of us can probably remember what happened in 08, 09, 2010, the last time that the economy was a lot tougher than it is now. And municipalities across the state took a pretty big hit financially, and that healthy fund balance is what helped carry you through some of those tougher times when they come around again. So how do we get there in terms of that increase in your general fund balance? Here's the highlights of your general fund revenues. You can see about $27 million. You were about $1.5 million higher than where you were in the prior year. That was a combination of your tax assessments being higher, so your tax revenue was higher, as well as franchise fees and license revenue. And you were also over budget, as you can see, a combination of property taxes and, again, your franchise fees and licenses. So good, healthy year on the revenue side. If you look at the general fund expenditure side, again, a little under $22 million in terms of your expenditures, and you've got the highlights of what that looked like. About a $2 million increase from 2018, and we kind of show you what that is by department. But for the most part, that increase was the result of increased salaries and wages, as well as benefit costs continuing to go up. And I'm going to talk a little bit more about that in just a moment. And then you were $1 million under budget. And again, we kind of give you the highlights there. But to me, this is a good example of everybody here doing a really good job from a budget standpoint in terms of your revenues are a little bit higher, your expenditures are a little bit lower, and that's probably really what your goal is when it's all said and done if you're preparing a reasonably conservative budget. So I think you all have done a great job on that end of things. I've got a few highlights in terms of the other funds. I'm not going to spend a lot of time on these. You've got the information in the presentation. But probably the most important thing to remember with all these other funds is all of this money is restricted in one way or another So it can't just be used for general operations. You've got to make sure you're using it according to the laws, the regulations, the restrictions, whatever they may be. The hospitality tax fund is just a great example of that because it is restricted to be used for tourism, so you've just got to make sure that you use it for that. So the hospitality, you can see about a $1.7 million fund balance. Real property fund, about $3.5 million. The road paving, you've got about $448,000 there. Your stormwater fund, about $1.7 million. And I know you all have plans for how you are going to use these resources. A few years ago, the city had to begin recording a very large liability related to the state pension plan. Your employees participate in that plan. Several years ago, there was a new governmental accounting standard that basically said, City of Greer, you, along with every other government in the country, we want you to start recording your portion of the unfunded liability that exists at the state retirement system. If you put the regular state retirement system with the police officer retirement system together, that unfunded liability statewide is about $25 billion. And so the City of Greer, you can see your portion of that there is about $20.5 million. Two things I'd just like to remind you to make sure you understand. One is you don't have to come up with $20.5 million to satisfy that liability. That's up to the state. What you have done and you will continue to do is, as long as you are paying your portion of the employer and the employees obviously paying theirs, but the employer portion of what the state asks you to pay for the retirement system, you're doing everything you can and should be doing as far as that's concerned. However, the one thing that's important to remember is that the state has already told us that at least through 2022, on an annual basis, the employer rate is going to continue to go up 1% a year. So your budget, there's going to be a bigger chunk of your budget that's going to continue to be taken as a result of the increased rates with the retirement system. Just a couple highlights in terms of your capital assets and then another slide on your debt. Again, just kind of reminding you, you all know about this. You're making decisions about how to spend a lot of these funds. But you can see you've got about $50 million overall in capital assets, and a pretty significant increase this year as a result of some of your projects, obviously the streetscape and everything going on downtown being a big piece of that. And then on the long-term debt side, you can see about $28 million there. We like to remind you that every municipality has what's called a legal debt limit, and it basically is 8% of what the assessed values are for the city. For you, that is about $10.7 million. Of all your debt, there's only about $7 million of that actually applies to the legal debt limit, so you still have another $10 million that's available under the state law with the legal debt limit. We always like to just kind of hit some highlights in terms of what's coming down the road for you. And really the only thing I really want to mention here, you can see there's a couple things coming down. The one thing that's probably more important from our perspective than anything is that first bullet there related to the fact that because the city receives federal funds, there's standards out there that are called the Yellow Book. There are some new regulations that are coming out that may make it more difficult for us as your auditors to continue to help with the preparation of your financial statements. They haven't come out and told us exactly what all that means yet. We're still waiting to hear from them. But just so you know, that's something that we'll probably continue to talk about this winter and spring, hopefully once we get some more information. We also, as we're going through the audit, there's two different areas that you have some additional communications from us. One is if we have any audit findings, they're included in the back of the CAFR in the compliance section. We did have one this year related to some significant adjustments that needed to be made. We've talked in detail with Mr. Driggers and the mayor, as well as David and Susan about that. Not really concerning for us in terms of going forward. We kind of look at them as some one-time issues that happened. The city, when you receive a significant amount of federal funds, over $750,000 a year, we would be doing some additional work, and I know that might occasionally happen with the city, but this year it did not, so we didn't have to do any additional single audit work related to your federal funds this year. The other document that you will receive from us and is separate from the financial statements is what's called the management letter. It's a letter from us to you as council, and it basically includes two things. One is some required communication from us to you in regards to were there any disagreements that we had with management during the audit or any other issues that may have arisen. There were none. There won't be any information regarding any of that. Also, if there were some recommendations we had that rose to the level that we feel like it was important to put those in writing, those would be included as well. But there won't be any recommendations in the management letter. The staff's doing a good job with the areas that we look at. So let me just hit a couple highlights again. One, the city is going to receive that unmodified opinion, that best opinion that you can receive. So you as council, Mr. Driggers, as well as the finance staff ought to be very pleased with that. And as we talked about with your general fund balance, as well as some of the other funds that you have, you're in a very good, healthy financial condition as of June 30th, 2019. And that's just a congratulations, because we know in our role that that's not easy. That takes a lot of hard work, a lot of hard decisions that have to be made. So you ought to be pleased with where you're at financially.